Hi, welcome to the market alert for Tuesday the 3rd of November 2015. So in yesterday's trading, this is in the basic version of the software, we had a signal at 235. We then see the market trading up to the psychological level of 17,750 just before we had the manufacturing data, I think it was. Let me just double check. Yeah, the ISM manufacturing figures came out and they only came out just above what they were actually forecast there. So the market moved higher. We then had a sell signal which took 24 points of the profit from the first, and then we had a second signal here which took until the evening session when we had another one where the market actually went through the 17,800 level. So you can see the market trading up to the high for the day there at 20:30, half an hour before the close. So at any point through here you consider closing. It's a shame we didn't go on to the psychological level like the market did with all of the other targets in the session, but generally that's what it will do. But it just ran out of steam as prices headed towards the close there. So again, recouping the potential loss there, and just give you a figure here from the entry price around to, let's say, 2050. Even at the 2050 level, even at the close of this bar, you've got 47 points on this trade, but there was a lot more to be had as the market rallied up towards the 17,850 level there. In the daily charts, you've got the market struggling with the 17,800 level. You can see this, even though the market traded through this yesterday, the market is currently back sitting on this level, currently trading at 17,803. Let me just deactivate the measurement tool there. So the market needs to drive through this in order to move higher. So what news have we got today to assist this? At 3 p.m. we've got the factory orders. They're going to be out there, forecast to be not as bad as last month, so we'll wait and see. And Draghi is speaking at 7 p.m. so it could be a quiet afternoon. No main news to actually move the market. However, as we go through the week, just to bring this to your attention, there's a whole stack. In fact, it's the Federal Reserve show this week, and if we just move on to Wednesday, you can see that they're wheeling out Brainard. Well, we start off on Wednesday with it's more like the central bank show. We've got Draghi at 9 a.m. tomorrow. We've got the FOMC Brainard. We've got Yellen speaking, and we've got Dudley speaking, and then we've got some Japanese monetary minutes out as well late in the evening. We've got Fisher speaking. On Thursday, we've got Draghi speaking, we've got Carney speaking, we've got Dudley speaking, we've got Fisher speaking, and Lockhart speaking. Now, this is unprecedented. In 20 plus years of trading, I've never seen so many Fed members actually wheeled out to actually speak. It's just absolutely staggering. So whatever they're trying to do, goodness only knows, apart from keeping the Ponzi scheme alive, but it's just incredible. Even on Friday, Brainard's being brought out again to speak. And so we've got from tomorrow, it's just the Federal Reserve and the central bank show. It just makes you wonder what's actually going on, because this never used to be the case at all. In particular, the Fed, where they're just wheeling these people out to keep the market on the highs. That's all I can see is what they're actually doing. In the implied volatility, 1184 yesterday, down slightly on the previous day, and again we need the blue line to cross the yellow line, but if this goes down to 10%, that's great. We're going to get one major correction. The rumour mill has already started about the Fed reducing rates in December at their next major meeting, and no doubt this circus that we're seeing this week is to do with them talking about preparing the market in order to increase interest rates. Let's wait and see if they do it. I still don't think they can afford to do it because of the effect on the interest debt payments and the bond market, but who knows? It doesn't affect them. Their pensions and everything else is sound anyway. So it doesn't really matter. It's more of an academic exercise, and we're in no man's land as far as economics are concerned. As Plosser said last week, there are no economic books for what we are seeing at the moment, or been going through for the last 7 or 8 years, with the amount of money they've been printing just to keep the illusion alive and the banks in funds. But let's wait and see. It's just a matter of time before it all starts to unravel, I suspect, but not without another push to the highs first, and also the prospect of printing more money. But as I say, it's in the lap of the gods, or the Feds, the central banks, at this time, and none of us know what sort of tricks they will pull in order to keep it alive, as we've seen with Greece and Cyprus, the banks there. It goes on. I mean, you don't need to know about every single detail. We know that they'll do anything just to keep it alive. The increase in the debt ceiling last week in the US to 19,600 billion. There is no ceiling, it's just nonsense. They're always going to increase it because they know if they don't, then the US will default, and they're never going to default. So when you hear this word debt ceiling, just ignore it. It just means that they've got to pass it through Congress and the House of Representatives just to get the approval, and everyone will vote in its favour every time without fail, because they've got no choice. So let's wait and see. That's it for today. See you in tomorrow's edition. As ever, thank you for your support and also for watching. See you in the next one.